Are we at the market top? Is there any more room for Bitcoin to grow? Let's find out in today's deep dive into market condition. Hi, my name is Zhenya. I'm a software engineer, head of research at EVG Capital, and an investor in crypto since 2017. Now we're starting second week after Trump's election, and market is very optimistic. Market is expecting deregulation, quantitative easing, and overall good conditions for business. Let's zoom out and look at all the macroeconomic conditions that can affect price of Bitcoin. So we know that Fed just cut rates one more time, and the same week when Trump was elected, and that was a super week because we had election, we had the interest cut, and now there is not much that's coming up by the end of the year. We already had the halving, we already had 3 interest cut rates. Unfortunately, the interest rate actually grew since September, since Fed started to cut rate. However, in the recent weeks, the last 2 weeks, it's kind of started to stall and not increasing anymore. And the reason why interest rates are important for risk on assets is if we have high rates, it means that the global community, the market allocators, they're expecting either higher inflation in US or they are not believing into the US in general as an economy. In this case, we're looking at bond yields. They are increasing when people are selling the bonds. So the more people sell the bonds, most likely it's not the people, it's the institutional investors, it's the governments all over the world. And if they sell the bond, the interest rate goes up. And we had this increase in interest rate signaling that people are selling bonds. Who are actually selling those bonds? The biggest holders of bonds is Japan and China. Ever since pandemic, we see that China started to sell bonds. So they continue selling it while UK is increasing the bond holding. It's possible that in the last 2 years, China stopped selling bonds, but we still have increasing the yields. So why is that? Don't forget that besides cutting the interest rate, Federal Reserve has another way of monitoring the economy and pull the buttons. The quantitative easing or quantitative tightening consists of 2 things. One is the interest rate, but the second one is the balance sheet. And if we look at the Fed's balance sheet, what's interesting is that US government can issue its own debt, which is the job for Treasury Department. But then the Federal Reserve can actually buy those treasuries or sell those treasuries. And that's the metric is that we can follow is the balance sheet. So Federal Reserve can buy US owned debt. It's kind of interesting. Well, if you look who actually controls Federal Reserve, it's not controlled by the government, and that is a completely different topic. But if we open the balance sheet of Federal Reserve, we see since April 2022, it's been decreasing. And this period is the quantitative tightening. If we add the global liquidity index, it consists of all of the liquidity from top countries. If we look at the settings, it's the European Central Bank, it's People's Banks of China, Bank of Japan. We can also include the money supply, M2 in US, but more importantly are these central banks. When the global liquidity started to decrease, the Federal Reserve also started to decrease their balance sheet. Until now, we've been in quantitative tightening mode. And even though in September, Fed started to cut rate, and now it's cut by 75 basis points, 3 times, we're still not having a lot of liquidity in the market. And when there is no liquidity, there is no bubbles blowing up. And if we don't have quantitative easing and we continue staying in quantitative tightening, Federal Reserve continues unloading their balance sheet and selling the treasuries that they've been buying. So they started to buy the treasuries when the pandemic started, and we see this big spike. And what followed in 2020, huge pump in equities. We had the crypto pump that started in 2020 and finished in 2022. That was the DeFi summer. And as the Fed increases their balance sheet, we have opportunities for bubbles to blow up. But if Federal Reserve changes into quantitative tightening, that's when we have bursts of those bubbles. And if we look again before DeFi summer in 2017 and late 2017, 2018, there was a burst of the previous crypto bubble. If we look again at our Federal Reserve balance sheet in December 2017, they started to decrease their balance sheet, and we also see the global liquidity to decrease. And that was the burst of crypto bubble. So as long as Federal Reserve have quantity tightening in place, even though they're cutting the rate, it still doesn't help Bitcoin to really pump to its highest potential. And the current pump that we're experiencing, it's solely because of the Bitcoin ETF. And we can see that there is a big potential if we see Federal Reserve turning around and starting actually buying treasuries back. Next up is dollar index, and just like the rates, it's been increasing since September when the Feds first started to cut rate. And you need to remember that this index is measured against mostly euro, 50% is euro, yen is another one, and it's more hints at the situation that happens in the economies in European Union and in what's happening with the Japanese yen. And both of those currencies been going down against the dollar. Hence, we have the strong dollar. Next one is gold, and for the last 2 weeks, it's going down. It corrected by about 8%, and usually it's inversely correlated with US dollar. It's possible also that investors are considering more risk-on assets and unloading their gold positions. And honestly, I don't buy the idea that since Bitcoin is a digital gold, it should start trading like real gold, because Bitcoin is still considered a risk-on asset, while gold is a risk-off asset and a hedge against turmoils and bad economic environment. Last week, Federal Reserve also reported a slight increase in inflation. CPI reading year over year was at 2.6. 2.6 was also an expected number, but it's a first increase since April this year. And increasing inflation when the Fed is trying to cut rate more and more is not a good sign. Everyone wants inflation to go down. Fed wants inflation to go under 2%. And the lower the inflation, the more chances that Federal Reserve will cut rate more and more, changing into quantitative easing. If inflation stays high and doesn't go down, we will have higher bond yields, no more interest cuts. Federal Reserve will not turn into quantitative easing and start buying the treasuries back. That is all upward pressure on all risk-on assets. Also, the unemployment was reported and it stands at 4.1%, which is still very low compared to pre-pandemic level. Average was about 5%, which shows that the US labor market is very strong and there is no need for more interest cuts because there is no need to support the economy. It's already doing pretty good. The CME tool that predicts chances of next interest cut rate that will happen FOMC meeting on December 18 currently shows 38% of traders thinking that there will be no interest cut rates and 61% think that there will be interest cut. But right before the meeting, those numbers change drastically, so let's keep an eye on it. And that also correlates with the Jerome's recent comment that the economy is not sending any signals that we need to be in a hurry to lower rates. Institutions continued to load on Bitcoin ETF, and only last 2 days last week on Thursday and Friday total was negative. Overall, we can see that BlackRock continued to load on Bitcoin, and only when it's reached 90k where we are at the top, there is a little bit of slowing down of this buying pressure. Fidelity, for example, started to sell, but Fidelity is more retirement accounts people buy or for regular accounts, and it represents more of retailers who are buying. BlackRock is more of so-called smart money or people who have a long-term vision for crypto industry. It's interesting to see the divergence that happens when BlackRock continues buy, Fidelity is selling, or the opposite. And similar picture we had for Ethereum ETF, where BlackRock continued to buy, only slowing down by the end of the week. Last week was the highest purchasing pressure from institutions for Ethereum ETF. Never before they bought this much Ethereum ETF. Coming to S&P 500, the index is slowly going up, updating its all-time highs. It's completely retraced to 0.68 Fibonacci level after the election pump. It poised to crawl higher and higher. Same happens for QQQ, which is tech companies. It's an example of risk-on assets, and it will be traded similarly to how Bitcoin is traded. Now for technical analysis for Bitcoin. We can see on a weekly chart that we had these two strong candles for the last 2 weeks following the election and the FOMC meeting. And these are strong vector candles that represent a strong push, bull push up. We see increased volume, but the volume is still not as high as at the peak when Bitcoin pushed to the highest at the beginning of the year, and it's not as high as 2021 push when it got pushed to the top of its previous all-time high at 60k. Looking at MACD and RSI, there is no signals, we don't have any divergences, at least on the weekly chart. Going to a smaller time frame, on a daily chart, we see Bitcoin a little bit slowing down at the top here. The volume drops and RSI is overbought, but it slowly started to go down. But we don't have any divergences forming yet, so no real signals here. There is no clear picture what's the direction gonna be. Dropping to even lower time frame, 4 hour, this is where we see a couple bear divergences on MACD, and we see RSI just dropping down. But nothing really pans out from these divergences. Since we didn't have a big correction, we can see that RSI slowly flattens out together with the price, and we still don't see any big correction, so sellers cannot overwhelm the buyers. Looking at 4 hour, we don't see any signals. We had some bearish divergence on that MACD was showing, however that didn't pan out and we didn't have a correction. All that buying pressure continues holding the price above, and we don't see the correction. And in moments like this, when we have the election, the pro-crypto administration, FOMC meetings with cut rates, however, there is no decrease of the balance sheet yet, but still there are lots of positives, fundamentals coming in. It's very likely that we continue pushing higher and higher because there is just not enough bears, there are not enough pessimists who would be selling Bitcoin, creating that downward pressure and pushing the price lower. So most likely we're gonna reach 100k within next week. So it's very possible that we're just gonna stay in this range between 89 and 92 for some time until we push to a higher level. Dropping down to lower time frame, to 1 hour, we don't see any signals to trend change. We don't see any divergences on MACD, everything kind of cleared out. We see an increased volume. This push probably kept the prices from falling, and most likely we're gonna stay in this range for some time between 82, 87 and 92 until there is another new push to a higher level. Now let's look at altcoins compared to Bitcoin. First would be Ethereum. Now let's look at altcoins compared to Bitcoin. First would be, of course, Ethereum, and you probably know that Ethereum was very weak this year, and Bitcoin is outperforming Ethereum on all levels. And now we have a small slowdown in the drop for the last 3 days, and hopefully Ethereum will start pumping as much as Bitcoin. But so far that's not the case. Surprisingly, old coins like Ripple and Cardano started to pump. And no one really expected that because it's coming from 2017 era, increased in price a little bit during previous DeFi summer, but crypto community doesn't really like Ripple because it's lack of innovation, it's super centralized. However, it's been tied in US courts for a long time, and now this pump usually probably relates to clearing the regulation, and the case probably will be, all the cases and prosecution will be either dropped or cleared out, and Ripple can continue replace Swift and allow banks to communicate on their blockchain. Cardano did the same. Last 2 weeks we have a pump. It's very similar to Ripple, 113%, and still shy from DeFi summer pump. The founder of Cardano is appointed by Trump to some government position. That could be another trigger for price increase. And if we measure, even with the current pump, after doubling in price in just like 2 weeks, we can triple to the previous highs that were established in 2021. But again, lack of innovation, nothing happening on their chain, very centralized. Another altcoin that outperformed all other altcoins is Solana. It continues to pump. It's updated this year all-time high and on its way to reach previous highs that were 255 254. I saw on Twitter there are something like 340,000 new meme coins being launched every week. And if the meme coin cycle continues, we will see new all-time high for Solana. So what is the bull case for current market condition? One can say that it's just the beginning of the big pump, and 2025 is the year of crypto with the deregulation and the beginning of quantitative easing. If we see Fed stopping selling those treasuries and more liquidity coming into the market. However, for bear case, we can also argue that this is absolute top and Bitcoin is not able to go any more higher because it's at all-time high already. And one indicator that hints at that is fear and greed index. We are currently at 84, and that is extreme greed territory. Nothing good ever came out from this territory. You can look at the chart and see that all previous tops were when we were at extreme greed. There was a little moment here, and that was the beginning of the pump at the end of 2023 when we came into the extreme greed, but then we came back, and that's when the Bitcoin ranged for 2 months and then corrected and only then continued its pump. But it's not the time to come in and start buying Bitcoin using leverage. One thing that you can consider is some of the DeFi tokens that haven't reached their year all-time high and their previous all-time high from 2020 bull run, and that would be a safer bet. Thanks for watching. Let me know what you think of this market research, what indicators you are using, and where do you think the market is heading. Subscribe to our newsletter and receive the same research straight into your inbox. Until the next video.